Hey guys, it is Julie here with JT.Wealth. In today's video, we are talking about Tesla and their crazy latest price target of $90 per share. So let's get into it. Alright guys, welcome back and thank you so much for being here. Like I said, today we are talking about Tesla and the most recent crazy price target of $90 per share, obviously coming from the bear side. We're then going to take a look at the bull side and a 3-year price target as well and the supporting factors for each. And just before we start talking about Tesla, this is just your friendly reminder that if you enjoyed today's video, make sure you give us a big thumbs up and leave your thoughts in the comments down below. Also, if you enjoy free stocks, make sure to check out some of the links in our description. Right now, Webull is giving away 4 free stocks just for signing up and funding a new investment account, so make sure to go check that out. Okay, so just as a reminder, Tesla is currently trading around $636 per share. So this new price target comes as quite the surprise. And that is coming from JP Morgan, who actually lifted their price target on Tesla to the $90 per share. The assessment from JP Morgan analyst Ryan Brinkman reflects some of the concern on Wall Street for the pace of Tesla's meteoric rise this year, which has added more than 660% to the group's share price and more than $500 billion to the company's market value. Its net income for the third quarter of this year was $337 million. Brinkman says Tesla shares, in our view, and by virtually every conventional metric, not only overvalued, but dramatically so, citing a stock price that trades at 1,325 times its long-term price earnings multiple and 291 times its 2020 estimate. Brinkman advised clients not to increase their holdings in Tesla to its approximate 1.44% weight in the S&P 500 benchmark, even as the bank itself suggests that index tracking funds will sell $57 billion worth of shares in other companies in order to gather up Tesla shares before its December 21st entry. Now, Brinkman raised his price target to $90 up from $80, so not a huge jump there, and obviously still maintains a sell rating. According to Bloomberg data, investors who followed Brinkman's recommendation received a negative 867% return in the past year. I'm assuming and kind of hoping for people's sake that just includes missed opportunities there, and in that case, Tesla would account for over 600% of that number. As we know, shares of the electric vehicle maker have been on an incredible rally this year, ever since its 4th consecutive quarterly profit earlier this year raised the possibility of the company getting included in the S&P 500 index. And investors' enthusiasm only accelerated further after the decision was formally announced last month. Now, the average analyst price target of Tesla is about $364, so well below their current share price. Now, in a one-off piece of news here about Tesla, Elon Musk is having some trouble with snakes. Yes, that is right, snakes. And this has to do with their expansion in Germany. The company has been clearing land in a pine forest in Brandenburg outside of Berlin to build their latest gigafactory. But according to German newspaper, a German court has ordered the company to halt those operations over environmental concerns that snoozing snakes and lizards could be impacted by the work. Tesla will have to prove that its land clearing won't harm the hibernating reptiles before it'll be allowed to resume. Talking about the sting of waiting, Tesla's Shanghai Gigafactory was constructed in less than a year, but that is looking unlikely for the company's first European manufacturing facility. Although the construction of the Gigafactory is broadly popular in Germany, this isn't the first time that the strict European regulatory environment has caused headaches for the company. In early October, Tesla solicited local feedback about the project. What was expected to last 3 days instead took 8, as concerned locals questioned, among other issues, whether the company's on-site battery production would tax the local water supply. In response, Tesla agreed to cut the facility's water usage by more than half. CEO Elon Musk, who has praised German engineering in the past, may have no option but to wait. Meanwhile, rival automakers like Volkswagen continue to roll out competing electric vehicles. Tesla hoped to open its Gigafactory in Berlin in July of 2021, but if it has to wait out this hibernation season, the opening will almost certainly be pushed back to later in the year or beyond. Now let's switch gears to some positive news for Tesla, including one very optimistic price target. And that is a $2,500 three-year target from Munster. According to Loop Ventures co-founder Gene Munster, Tesla's story is evolving and the company's stock could shoot up to $2,500 in 3 years. Munster was talking to CNBC's Squawk Box program on Monday and said that the Elon Musk-led company was on an evolutionary course. Elon has recently said that 30 to 40% of the value of the car could be in insurance, Munster explained, and what that means is that they can start offering their own insurance and improve margins. That's high margin revenue. In terms of potential challengers, Munster sees only Apple potentially matching Tesla if the iPhone maker were to get into the same segment. As a Tesla investor, that would be the one announcement that would cause me to step back and rethink things, Munster said on a possible foray by Apple into autos. Tesla is also looking to raise another $5 billion in capital, which would bring them up to $10 billion in just 3 months. Tesla is taking advantage of the meteoric rise of Tesla shares, which are up nearly 700% so far this year. Their market cap has now topped $600 billion, a massive premium compared to any other automaker by just about any measure. Here's why it's smart for Tesla to beef up its balance sheet. So this plan to raise another $5 billion will represent less than a 1% dilution. Now, a shelf registration allows a company to issue and sell shares at its discretion, giving it greater flexibility over the timing. The offering in September was also conducted pursuant to a shelf registration. While Tesla has made undeniable progress in recent years in improving its financial performance, the company is consistently generating positive operating cash flow and free cash flow. The soaring stock price has put shares in unprecedented valuation territory. The stock trades at 21.6 times sales, unheard of in the automotive sector, as Toyota trades at just 0.8 times sales. Considering the $1.9 billion in free cash flow that Tesla has generated over the past 4 quarters, including a record $1.4 billion in free cash flow in Q3, the company arguably doesn't need to raise cash right now. But with Tesla stock fetching an insane premium, existing shareholders face negligible dilutive costs, and bolstering the cash by this much reduces the financial risk on the balance sheet. So what does Tesla want all that cash for? The company is in the process of expanding Model Y capacity at its Gigafactory in Shanghai, and construction is ongoing at similar facilities in Berlin and Texas. Tesla has increased its capital expenditure guidance by $2 billion to $2.5 billion, and now expects to invest $4.5 to $6 billion in each of the next 2 years to support future growth. Additionally, the rising stock price has led to another inadvertent consequence. Much of Tesla's convertible senior notes are now convertible at the discretion of the bondholders. While Tesla can choose how it pays back that debt, cash, stock, or some combination thereof, conversions would require some form of capital outlay. Even though CFO Zach Kirkhorn said that the company already had ample liquidity and expected cash flows to fund its capital needs, an extra $5 billion doesn't hurt. As a Tesla investor, I am quite all right with that 1% dilution in order for the company to then have $5 billion to continue investing and expanding and bringing that future growth. Now, one last piece of exciting Tesla news is their planned expansion into India. Tesla is receiving a tremendous amount of interest from retail investors in India. However, the company does not yet sell vehicles there or have a manufacturing plant. Musk said in a tweet in October that Tesla would enter the Indian market next year for sure. 2 state governments in India are each attempting to woo the EV maker to establish a manufacturing facility in their jurisdiction, as per local media reports. And this will be a huge opportunity for Tesla, as India is set to pass China as the world's largest population by the year 2025, as per this chart from ourworldindata.org. So by bringing manufacturing and Tesla sales to India, plus their continued expansion in China, Tesla will have a strong foothold in 2 of the world's largest populations. So there we have 2 very differing outlooks for Tesla between $90 and $2,500 per share. I've said it before, I don't think there is a stock that analysts are further apart on than Tesla. Obviously, we know Tesla is a lot more than just an automotive company. These guys have a lot going on in a lot of exciting areas. Personally, as an investor, I believe that these positive catalysts far outweigh any of those bears' outlooks. Of course, I always love hearing from you guys, so please let me know your thoughts. Do you think the bears have any validity to their $90 price target here? Or how high do you think Tesla can continue to go? Make sure to leave it down below in the comments. If you made it all the way to the end of today's video, make sure you give us a big thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful day, and cheers.